Hello, this is Martin from seekedge, the channel for learning about trading and investment. Welcome to a new episode of Markets Next Week, where we look at what happened in the market last week and how we can make a good trade plan for the next week. We are looking at August 23rd, Monday 2021. So, if you have not subscribed, please subscribe right away, and also please share to all of your friends. That's the only way that we are motivated, right? And that does not cost you anything. Thank you so much. So as we do every day, right, we would look at what price action, and what candlestick patterns appeared as last week. So Nifty, what we had was bearish spinning top on the top of a rally. It is bearish, and it was a bull trap as well, right? And that too, it happened after hitting a all-time high. So it dipped, it made a, during the last week, it made a V-shape, inverted V-shape, downside, and that was 2% fall that happened on the Nifty. And for Bank Nifty, it was 3.7% vertical fall from the top. That's what happened, right? And remember that the previous week it had closed about 36,000 after 25 weeks of not being able to do that, right? But gave up that just like that, and formed a wide bearish candle on the weekly basis. Now in the Nifty daily candle, so we'll see all this in the charts in the next slide, but I'm just explaining that. So the weekly chart, daily charts, what we are seeing in the Nifty is an inverted hammer, and it's forming a potential change in polarity. So change in polarity is when the previous resistance acts as a support, and then there is a bounce that happens from there. It's not confirmed, but if it moves above yesterday's close, and then we can say that it may be a bounce. So a inverted hammer and the change in polarity is indicating that probably there is a reversal on Nifty. And the Bank Nifty, it's a spinning top, but that spinning top is not on the top of a rally, but it's in a downfall, so it's not harmful. And it is at the support zone also. Previous major support zone was 35,000 level. So that also does not rule out a bounce from this momentum support, and from this basically from this change in polarities support zone where it is in the Bank Nifty. So both of them, it is possible that it can bounce from here because it has fallen and taken support. Now Bollinger Bands, if you see, the volatility expansion had started last week on the Bank Nifty. Nifty, it had already started since several days before, right? Previous week when it broke out, it actually started working on the Bollinger Bands, and the volatility expansion had started. But while that expansion is happening, midway it has fallen down, but the contraction is not happening. The expanded volatility remains there, Bollinger Bands. Now this is what we are talking about. Left side is Nifty. You can see that on the daily with the gap. It's a gap down after a bull trap was made, right? It gapped down and formed an inverted hammer. Similarly, it's a swinging top, and big vertical fall that happened on the daily, right? Weekly, if you see, it's a spinning top, wide range bearish candle, spinning top also. We saw that Bollinger Bands expansion is seen both sides. Nifty also it started, but patterns are fallen off the moving average also on Bank Nifty. Now support and resistance levels is something that we the first support for the Nifty currently is Fibonacci 32 extension projection of since it's uncharted territory that it was there last week. So that is where it moved further to hit the 16,700. So 16,350 the first support. Then you have 16,000 to 16,150, that level, that's on. Then you have 15,850 and 15,950, which is the previous 23 retracement levels. After that you have 15,500 and 15,650, that's on, where it took multiple previous swing low. And the resistance approach is 16,700 obviously, where it hit and then fall down. That is first resistance, and above that it's 16,850, which is a projection level, 78%. Then you have the rounding number 17,000 as the third resistance on the top. Bank Nifty, you can see 34,900. No, it's right now at 35,000. 34,900 to 34,400. That level would be the first FIB 23 retracement support level. Then you have 38% retracement support level at 34,000 and 33,700. That zone, and then 33,500 and 32,850, which is also previous support zone of FIB 50 retracement. Now upwards, it's all previous resistance to previous supports. Now it is previous resistance continue to be there at 35,600 to 35,900. So 36,000 remain to be ahead. That's the first resistance zone. Then from 36 to 36,500, that is the next one, and then it's all-time high 37,700. So this is the resistance and supports, and downside also it's expired here, right? Now that is what is shown here, right? So the retracement support, let's say the projection support of the Fibonacci, and the Fibonacci retracements downside, right? Support zones 1, support zone 2, right? And then upside between 700, 350 and 16,000, 3 levels, right? Bank Nifty similarly, all-time highs 37,700 resistance and 36,500 resistance, 36,000 resistance, then support zone. Momentum. The momentum continued to be bullish on the Nifty on all time frames, daily, weekly, monthly. So Bank Nifty, the momentum is given up. It is given up last week. Whatever it gained previous week, it is given up, and now it is moving towards. It's gone to the sideways and moving towards the support zone of 40 of the momentum. That's what happened. So Bank Nifty lost the momentum is the news. Now Nifty has a bullish momentum reverse divergence, which can, if it works out, it's not confirmed. It's confirmed if it moves above the close of the previous candle, right? So that is a divergence that's the Nifty only. Now Adx indicator, which is a trend indicator, right? Trend is bullish and it is rising even after this fall on the Nifty, and rising with strength. The green part of it we'll see in the next slide. That is showing that the trend is increasing its strength on the Nifty, and all other time frames are also bullish. But in Bank Nifty, the crossover to the bearish zone on the short term has happened, but weekly and monthly the trend Adx indicator is bullish, but it is not rising. The short term crossover of bearishness is not having enough strength to sustain that, right? So it has been crossing over for multiple times in the Bank Nifty, there also the trend indicator. So that's a summary of the momentum and the trend. That is exactly what you see here. This is momentum dipped but continued to be in the bullish zones. Momentum dipped and sideways and then moving towards the support. Divergence is this. The price is moving up, reverse divergence actually. Then momentum is moving down, right? So this could take support here and bounce back. Price could move up. Trend, you can see that Nifty left side continued to be in the bull zones and the rising strength of the trend. Bank Nifty close to the bearish zones, but strength is not enough. So that's about the charts. Now let's see the open interest analysis of the futures and options. On the futures, it shows, it shows long unwinding. Long unwinding means what? It obviously means slight bearishness. People have gone long earlier thinking that it is going. Bulls were trapped. Now they have gone long and now they are reversing and shorting. That will be, so that is bearish indication of futures trend. The highest. Now also if you look at the options open interest rate, you can see the call rating highest is now at 16,500. After it made 16,700 last week, right? Now it is 16,500 is where for the August expiry. Options call rating highest is there. After that, close by you have 16,600 also. Now the put support is seen only far away, 15,500, little far away, right? 16,000 also is having good put rating. So 16,000, 16,500 will be the, probably if it is consolidating, that will be the zone. Any breaking below 16,000 may indicate some bearishness to come in, right? Definitely. Now Bank Nifty, this highest call rating is 36,000, and 37,000 also is having good call rating. So that remains resistances to two major levels, right? 36,000, remember it was conquered earlier, but now it is again resistance. Now 35 and 35,000 and 34,000 both are now seen as support zone. So it may not go below 34,000 is what the options open interest rate is showing. The put call regime, we see it continues to be bullish, above 1 for Nifty. But Bank Nifty, look, it's bearish. 0.66 is bearish, far away from the 1. Okay? And the VIX, what happened last week? That's some news in the volatility side. It is short-term and close at 14. Right? So remember, we had gone to the 11 below that the levels, right? From there, it is 8.5% of movement that happened in the last week alone. So VIX is shooting up. The spike has happened finally. So it probably may be the end of the very low levels. No. Implied volatility is 13.3 and the historical volatility is 8.8, which is good. But the problem is IBP is only 13.9. Right? Unless the IBP is very high, it may not be ideal for the option sellers. Now, this is the charts that we are talking about, right? Left side Nifty, you can see the 16, 500, 600 support, and 15, 500, and 16,000 as the supports, right? 16,500 and 16,600 as resistance. Sorry. Bank Nifty similarly, open straight is showing 36 and 37,000 having resistance, and 34 and 35 is having supports for the August expiry, right? So that's about the open interest data and the charts. Now we are moving to sector. We'll watch sectors. IT sector moved 3.5% last week, right? But remember that the bearish divergence momentum is still there, not negated. It is vertically on up. Keep that in mind, but it is super bullish, 3.5% again. But slight caution has to be there, right? So dollar strength in the work from home model, new business model, let us say world is the reason for the vertical bullishness that is happening. Now FMCG did a breakout. It did breakout last week from the W pattern where it was attempting to break out since several weeks, 2-3 weeks, at the neckline of the double bottom breakout. Now it happened last week, and 4.5% of movement happened. All HUL, Dabur, Tata Consumer, Godrej, all of this has moved up. FMCGs joined IT in the bullishness. Now the metal is not turned bearish. Metal was bullish, it has turned to bearish. There is a bearish divergence which on the weekly, and that worked and brought down the market. Now it is at a make or break zone. It is at a 40 support, right? Momentum support, right? And there is a bullish reverse divergence, which is not confirmed, is also there. That works out. It can bounce from here. But any bearishness that happens from here downside would be not good for the metal sector. So metal is stay away right now. Copper sector definitely stay away, or even go short. Right? You can go bearish on that, because 3.5% last week it went bearish. It fall down. It is continuing to move down, right? There is an M pattern on the weekly, and if that is breaking, that neckline is going, means it's going to be big fall, right? But till the neckline itself, there is a lot of points to go down. So auto is bearish definitely. Pharma is also 4% fall has happened last week. Pharma is also auto, and metal has turned bearish, and FMCG IT remain the bullish sectors. The two picks from one is from the FMCG, one is from the IT. Both are the sectors which is working. From the sectors, two picks. Tata Consumer is doing good. It is getting into the upper zone of the channel on the weekly, and on the weekly the Mindtree is something on the right side, which is also trending very nicely. And look at the move, big moves are happening in the Mindtree, right? So you should not enter at the top of the channel actually, right? Tata Consumer is fine to enter, but Mindtree is at the top of the channel. So probably it may make sense for a small retracement to happen towards the downside, where you can enter, and then further it may curtail the momentum, right? So IT, you keep that in mind. The sector is having a bearish divergence on the weekly, so that will be cautiously bullish here also. Retracements, corrections can come up anytime. But these are two stock picks for the week. Now, institutional participation is what is interesting. Fyers sold 4,300 crore last week, while DS hardly bought anything, 100 crores, 160 crores, that's all. So this is a concern. Derivatives was also flat yesterday. But Fyers participation is bearish. Now look at the global markets. US markets fall down last week and made a recovery V shape, almost all the indices, all the indices in the US market did that. It fall down and then made a recovery. There are some doji small body candles that is seen in the Nasdaq, and a hammer pattern bearish on the top, indicating a reversal. All this seen in the, but overall US markets were at the all-time high levels, fall down and then recovered. Dollar index strengthened and actually broke out up a weekly double bottom pattern, and it is closed just below that neckline. And if it moves further up, dollar is going to, rupee is going to weaken like anything. Now the good news is that the crude oil has fallen 8% from the top, 64.5 levels. Brent oil has closed, which is some support for the economy, at least for ours. Now the currency pair of the USD INR is consolidating, but it closed green actually last week. It is at a major support zone. It is there. You can see that in the graph. It is at a major support zone. It has been moving around, consolidating again. Right? It tried to hit the channel top and then fall down and then consolidating. So this support zone is what you can see. Gold, you can see that is also at a major support zone. It had fallen down big, the dollar strengthened, but recovered fully and then moved up, and then it may be consolidating. It is also, the target will be the channel top. Now VIX, it's at 14 levels, right? But still spikes can happen. I don't know whether the spike will going to be down or up, but yeah. So calendar spread is something that I find that we should do. Probably the VIX may further spike up if there is going to be a bearish correction. The VIX is going to further spike up to 15 levels or more. So calendar spreads could work, could give Vega advantage that time. So therefore there is a Bank Nifty strategy, which is a calendar spreads with 35,100 and 35,200 piece. So the belief is that the 35,000 may be regained by the Bank Nifty in a week time, and it may not go and hit conquer the 36,000 that easy. So that's a view. Based on that, it's a 1:1 risk reward, so that is very good, but probability is little less, just 50%. So right, so there is only a bad thing, but otherwise it's something that you can look forward for a weekly play. Now just to wrap up all this, market made an all-time high last week, but it reversed with a V shape, and banking indices has done vertical fall of 3.5%. Both of this is causing fear that there is an upcoming correction that may be coming or not. The kind of reversal that happened from the all-time high. So overall bias has now turned to slightly bearishness due to this big fall that happened last week, major fall. And also Fyers was only selling last week, not even single they bought. Last 4 days they are selling. But there is we saw that Nifty is having a divergence, bullish, and the momentum is still bullish in the Nifty, and trend is still bullish, and it's at a good support level. 16,350 is still not broken. So all this gives indication. So Nifty does not give any indication of bearishness, but Bank Nifty and the fall of last week and the FI selling is cause for concern. That's the only reason why it is slightly bullish. That's all. Now VIX has moved up 14 levels. It's it is still not sure that we may further move or not, but if it moves to the 15 kind of levels, it may be we can say that it is out of the lower VIX levels. So once the lower VIX level is over, only then option selling can be done properly. Okay? But in V-shaped recoveries and intraday spikes continue to be the last week also. It's tough for the intraday also. So intraday has to be purely on tight stop losses based on price action levels, swing high or swing low, whether you're going long or short. That's all. So positionally, all the support resistance has to be kept. If it is moving up, trail the stop loss. If it is moving down, be sure on when you have to exit it. What breaking of what support resistance or pivot levels that we already discussed earlier. Right? That's all that we have to basically do. So that makes a summary of the entire week, and that exactly gives a context on where we are actually after a week of trading, and that gives us how we have to equip ourselves to make a good trade plan for the next week. We have actionables that is there on the stocks also. We know the sectors that we have to play. We know the indices levels. So just have to make the trade plan based on that. I hope this helps, and if you find this useful, hit the like button, and also subscribe if you are not, and then share it to all your friends and colleagues and family and whoever you think that it may help. So that is the only favor that you can do, which does not cost you anything. Thank you so much. Please help us get more subscribers and keep motivating us. We promise to deliver more useful quality content in the future. Thanks for watching and have a great trading and happy learning. Bye.